What's good, guys? Welcome back to the show. Today, I want to cover a question. It's incredibly important. It's something that everyone has asked themselves. Why has Bitcoin not broken out of 20K yet? Now, some of the top traders and fund managers have weighed in, and I'm going to talk about that in a second, and they gave a pretty good reason. I think it gives us an idea of why we're still sitting right around 19K. It's the longest time we've ever spent this high, so everyone's on the edge of their seats waiting for that break of 20K. I'm going to get to that in a second. But if you're a holder, if you're an investor, I'm sure there's some people saying, it doesn't matter if it happens this week or next month, it's inevitable. And sure, that's what some of the largest hedge fund managers in the world are thinking as well. Here's what Paul Tudor Jones had to say about Bitcoin going higher.
It's just with a market cap of 500 billion, it's the wrong market cap in a world where you've got $90 trillion worth of equity market cap, and God knows how many trillions of fiat currency, et cetera. So it's the wrong market cap, for instance, relative to gold, which is 8 or 9 trillion.
That clip was Paul Tudor Jones, and he was speaking to Yahoo Finance saying this is much too small a market cap for an asset like Bitcoin, where there's trillions of dollars chasing equities and who knows how many trillions of dollars of fiat currency floating around, where there's only going to be more trillions printed. Right? Bitcoin is just too small for the world that lays ahead. But still, the question remains, why haven't we broken through 20K yet? And this is a really important topic for traders if you are trying to time that breakout or understand how price is just consolidating and sitting right at the 20K level, but has not broken out yet. And some of the sharpest traders that focus specifically on Bitcoin weighed in on the topic about the trades taking place right here, and it gives us a really good hint as to why we haven't broken out yet. So if you're a trader, you should enjoy this show. Hit the subscribe button right down below if you listen on iTunes, Spotify, or YouTube. Appreciate you guys all tuning in. Let's get right into that topic after the intro. Before we can answer the question why we haven't broken out of 20K yet, we have to understand why we're here in the first place. Where is this bid? Where are the buy orders coming from that has pushed us from 15K up to 19K very consistently without too many drops, and it's been a very steady buy. But that doesn't tell the full story. So I'm going to point to a thread from Ari Paul. He's the CIO of Block Tower Capital, which is a crypto hedge fund, and here's what he had to say about who's been buying in the recent weeks. And remember, this is important to understand because it's going to give us some context as to why we haven't broken out just yet. So here's what Ari Paul had to say, and he wrote this thread on November 20th, but it's still relevant today. He said, some anecdotes on where the new money has come from to bid Bitcoin from 10K to 18K. Retail inflows have been relatively muted, meaning that a lot of individuals maybe haven't been buying, mostly institutions, and the crypto industry is at relatively low leverage. So where's that actually coming from? For most of this rally, we've seen a clear pattern of algorithmic style buying during US hours and flat activity during Asia hours. That stayed consistent for the past couple weeks as I've been tracking it. Those are largely high net worth individuals buying large amounts facilitated by algos or via an over-the-counter desk that uses those algos. So while it took a bit longer than many of us expected, the trend of hedge fund managers like Paul Tudor Jones accumulating Bitcoin, both personally and for their funds, has been accelerating. And Ari goes on to talk about the number of calls he's been on with billionaire hedge fund managers discussing their first $5 to $100 million buy. And so the first thing that I did as a trader when I heard Ari's thread was I wanted to look at the chart. Is that actually happening? Is price rising specifically Monday through Friday, or much more Monday through Friday than it is during Asian trading hours and during the weekends? So I opened up a chart and checked for myself. And surely enough, that has been happening. If you look at the Bitcoin chart towards the end of October and all of November, you see Monday through Friday during the US trading hours, almost all of the price rises were taking place during that time. And when the weekend starts, on my chart, it's marked in red, you have relatively flat trading activity. So if we enter on Friday at a certain price, call it 18.5, it might dip, it might rise, but it'll actually kind of get back to that 18.5 level come Monday. And then on Monday through Friday, we see another price rise. So there has been this algorithmic buying from larger investors or institutions that are looking to get an allocation, and that has been happening during US trading hours. But before I go any further, I want to explain what that algorithmic buying is. Why are institutions and high net worth individuals, why are they using this algorithm? Why is it only taking place Monday through Friday during US trading hours? Here's the best explanation I saw from Su Zhu. He's the co-founder of Three Arrows Capital, another crypto hedge fund, and here's what he had to say about the TWAP. Su tweeted out TWAP, or TWAP, stands for time weighted average price. It's the de rigueur among institutions when accumulating an asset whilst there's an absence of OTC or over-the-counter block sellers with whom to directly match. If you're not tracking all of that, it just means time-weighted average price is the algorithm they're using to fill their orders when there's not a lot of large chunks that they can just buy at a given price. The guarantee of fill and privacy of overall size are certainly also plus points. And so we're in this scenario where from late October all the way through November, and now as we enter December, the last month of the year, Bitcoin's rise from 12K to 19K was this steady climb where we're going 1 or 2% every single day, just grinding higher. No big drops, no big pumps, a steady grind higher as large institutions and large buyers are using that time-weighted average price during US trading hours to chew off as much Bitcoin as they can get as that weighted average price grinds higher as well. Right? That's what's gotten us to this level. That's why it's been such a steady climb, and now price is stuck here. Which brings me to why I wanted to make this episode in the first place. If this market phenomenon and these market conditions have been happening for the past few weeks, even past 2 months, that have given us this steady climb, why are we now stuck at 20K? Why isn't it continuing? How have we not been able to break right past this level, this all-time high price level? And one of the best insights I saw describing why this has happened and the trades taking place at this level came from Sam Trabucco. Now, Sam's a trader over at Alameda Research, and Alameda is a market maker that do billions in volume every single day. They've been on the top of the BitMEX leaderboard, so trust me, they know what they're talking about. I've had Sam on the show. I've had their CEO on the show. They're a good group of guys. They're good traders, and they have a serious understanding of what's happening here in the crypto market. Now, here's what Sam had to say as he broke down the trading activity right at 20K and why we have not broken past this all-time high yet. Now, one note here before I read Sam's thread, this was written on November 25th, but he also had a follow-up thread in which he said this likely happened again. So here's Sam's take, a quantitative crypto trader, on what has happened, why we're stuck right at 19.6, and why we haven't broken out of 20K. He looks at the Bitcoin chart and he said, heading into the past few weekdays US time, there's been a kind of predictable pattern. Now, everyone knows the narrative by now. Bitcoin is getting bought up by institutional investors and other entities in the US, so Bitcoin has been going up in the morning, right? That makes sense. I think everyone can follow, and based on the earlier parts of this episode, I think you can follow that as well. But let's suppose the whole world understands this pattern, like I did, right? In early November, I wanted to look at that chart. Is that actually happening? Okay, I just want to be a buyer Monday through Friday and probably take some time off on the weekends. So Sam says, if everyone understands this pattern, won't it just go up before that? Well, today on November 25th, he said that did happen. So from about noon Hong Kong time right until the big crash at the peak, Bitcoin steadily rose, presumably as people expected Bitcoin to get bought during US hours, which means we had a spike right to 19.6, and then during US hours, it actually dropped. Now, this is actually something Sam has seen time and time again. As a predictable fundamentals-based pattern arises in the market at a certain time each day, its effect will tend to shift earlier as more people figure it out and try to pre-position for it, right? Imagine traders seeing this is happening Monday through Friday. It's going on for a month. That's a clear narrative, especially if that buyer wants to get filled, right? Just start to front run that buyer. And that's what happened and caused a slight crash. So some examples he points out, the Binance listing effect, where coins used to pump ahead of listing and then they'd go down. There's also been alts going up after Bitcoin and then they stopped going up at all. And there's been many others. So Sam said, even though we've seen this affect previous days this week, the Bitcoin rally during Asia Day tells me it's not clear what to expect during the US day, and maybe all the impact has happened already, and now that US buyer won't want to buy. So we skipped over the evolution that happened just yesterday, where there was a rally during Asia ahead of US hours, people trying to front run, that kept up through part of the US, but petered out. So a quick summary. We've had institutions and a narrative that large U.S. buyers or high net worth individuals, hedge funds, institutions, companies want to be buyers and they want to get on board. They don't care what price they buy, they just want to get on board. So the way they're buying is using that time-weighted average price algorithm, and it's the reason why for October and November, we saw a very consistent rise up in Bitcoin Monday through Friday, and then price would basically be flat Asian hours and during the weekends. Now that changed as we entered December. Price hit 19.6, price was hitting 19,000. We're basically bumping into 20K, and all of a sudden people said, why don't I just front run that US buyer? And that started to happen. During Asian trading hours, buyers started to front run that buyer. They got too excited. People started to open longs on leverage. And as price ran up ahead of that buyer, then things crashed because we saw there was no buying pressure to actually take us through. So we've seen a very predictable pattern for about a month. We've seen people now try to front run that buyer, front run that pattern, get ahead of them, and that has led to people taking too much leverage, trying to push us through without the actual firepower to do so. So hopefully that gives you a quick summary of how we got up to 20K, how people have now tried to front run that trade that was taking place Monday through Friday. And when they do that, when they take too much leverage, they don't actually have the buying pressure or the demand or the size to get us through this level. We've now tried to run up a couple times, and then there's this cascading effect of liquidations as eager buyers that tried to front run the bigger buyer get liquidated. And for now, we are still stuck at the exact same spot. So as you're listening to this, we're at 19K. We have not broken out of 20K yet. I think it's because too many people tried to predict that pattern of the algorithmic buyer stepping in Monday through Friday, and we have not had enough firepower to push through. Now, if you're an investor and you're listening to this and saying, Luke, it doesn't matter, we're going to find new all-time highs eventually, I agree with you. But if you're a trader and you're looking to time that breakout or decide when is the narrative going to step back in, or is that narrative over? Do I have to wait for a bigger dip? This kind of stuff does matter. And being able to follow some of the traders and analysts and funds that give this kind of insight is really, really helpful. So I recommend following them all. Their links are down below. I appreciate you guys watching. Hopefully that gives you a really good understanding of how we got here on the smooth run up, how we've had a couple liquidations, even though we're right at the top of Bitcoin's all-time high price. It's because eager buyers got too aggressive trying to front run the predictable pattern. Now, if that buyer comes back, who knows? I'll be sitting here watching the charts and also making more videos and episodes for you guys. So hit the subscribe button right down below. Remember to like this video. And if you listen on iTunes and Spotify, subscribe because I have some killer shows coming out this week. I'm speaking with someone who runs an on-chain analytics firm looking at deposits into exchanges for Bitcoin and what that can tell us about what the bigger whales are doing with their Bitcoin. I'm also speaking with the CEO of one of the largest Bitcoin exchanges in the world later this week. So both those episodes will shed some more light on where Bitcoin goes next, if we actually get the breakout or if we're due for a bigger dip. Hope you guys enjoyed the show. I'll see you next time. Thanks for watching.